Jeff Crusey is the investment director at Seraphim Space, investment firm that's specialized in the space industry. And to give you an idea, Seraphim Space is a firm that's invested in multiple Earth observation companies like Spire, HawkEye 360, Iceye, and Pixxel. So Jeff knows a thing or two about investing, and this is why I wanted to talk to him, to have a candid conversation about how investing works in the Earth observation industry, how you create a fund, that is the money that these firms invest in, and who do they decide to invest in. In many ways, I think we can consider this conversation an introduction to investing, and specifically for the world of Earth observation. I don't know that much about investing. I'm more of a data scientist and an engineer. I write code and build things. So this was a great conversation to start from the beginning about how do you start a fund and how do you invest. One of the things that brings me the most satisfaction is learning things and getting this aha moments when all the pieces click together. And I think this is one of those conversations about just where the money comes from. We talk about Jeff's careers and his early days, mostly from climate tech and how he works in augmented and virtual reality, and how he found his way into the space industry and why Earth observation is a big part of that. We go over the differences between data companies like Planet, Maxar, Airbus, and analytics company who use that data to solve people's problems and how they're different from an investment point of view. I was also curious to ask Jeff about projects that are not well suited for Jeff Venture Capital, as well as understand what happens after a company goes public or goes through an exit. Jeff talks about his vision for a centralized platform where we can task, access, buy not only imagery but all geospatial data in one single place. We talk about who and how such a platform could be created and if it at all could exist or not. We even throw the word Metaverse in a few times, but I think it's still worth it. As usual, a bit of housekeeping before we start. The sponsors help the show keep going and grow, so here's a little bit about them. This episode is sponsored by the Radiant Earth Foundation. They support machine learning practitioners by providing open source geospatial data and code. One of the biggest projects they're working on is the Spatial Temporal Asset Catalog, or STAC for short. I got that wrong the last time, by the way. I mixed up the letters, and that's why we use acronyms sometimes. I don't like acronyms, but they're useful. Anyway, they're currently accepting nominations for the 2022 Radiant MLHub Impact Award. So if you're working on agriculture-related applications in Africa, you can go to the link below to apply for a chance to win $5,000 in cash. This episode is also sponsored by the pretty cool people at Element 84. They're a software engineering company specialized in big Earth data applications in geospatial. They've worked on projects like bringing the Sentinel-2 optical imagery on AWS Open Data Program. And I've had Dan Pallone, their CEO, on the podcast. That's episode 16, where we talk about how him and his wife founded the company and how they're running it today. You can find them and the link to the episode in the show notes as well. One quick word on the technical side of things. If you're not aware, I've started putting the videos on YouTube with a video, and I've been using a new platform to do that. And that means that sometimes I don't do things quite right yet. So as you'll hear in the episode, I'm actually using the wrong microphone. I used the one on my webcam. That's because I just didn't really pay attention very well when I set up the conversation. I'm going to try not to do that again, but hopefully the sound is all right for this time. One last thing before we get started. I've been doing the podcast for more than a year now, so I just wanted to say thanks a lot for listening. I really appreciate your time. I want to hear more and more from the people listening as well, so if you have any ideas on who I could get on the podcast, who you'd be excited to hear about, you can reach out to me on Twitter. I'm at Max Lunnerman, or you can send me a message on the website at mindsbehindmaps.com/contact. With all of that said, I'm Maxim Lunnerman, and here is my conversation with Jeff Crusey. Hi, Jeff. I'm pretty excited to have you on the podcast. As you probably know, I like starting all the episodes the same way. I like asking people the same question. So here we go. I'd like to know how you would describe yourself.
How would I describe myself? A curious wanderer is
A curious
typically how
wanderer.
I've described it.
Okay,
Yeah,
could you
I
elaborate a little
I
bit
think
more?
Sure. Yeah, I think a lot of times I hear people talk about their careers and they have this beautiful narrative and they did A and it resulted in B and it got them to their goal C. And I don't look at myself that way. I just have always followed my personal interests and tried to go as deeply as I possibly could on those personal interests while I was still interested. So I didn't have this, nice, neat path to where I am today. It was more of a random walk and bumping my head against a few walls. But I think I'm I think it's sort of the way I like to approach things. Just in regard to my career and
Right.
myself. Yeah, just remain curious.
And so that's like the guiding path about like which path you're gonna go on, like the just curiosity, whatever grabs your attention, your curiosity, and then you go down that road.
Yeah, exactly. And you never know. I don't like to try and predetermine where that's going to go. And I mean,
Right.
for example, I went to business school, undergraduate program, and I didn't really have much in the way of any technical training at that point.
Okay.
Um, and my friend sent me a link to some Feynman uh, physics lectures, and I was pretty captivated. And then I started to go down this rabbit hole around physics, and I learned quite a bit. Ended up sort of hovering around semiconductors at one point,
Okay.
and but it also resulted in some learning around physics modeling for game engines and all these weird things that don't seem related, but on some level they are. And so I
Right.
think that's really sort of the fun of it, is seeing how everything is interconnected in some way, shape, or form.
Yeah, that's one of the really interesting things. Like I when we started talking, I was like, all right, we're gonna talk about venture capital and investing, and then I went down a little bit like the path that you've been through, and realizing like, oh, there's like so many different portions of like the things that you've done and the technologies that you've done. So can we go back to you said you did you went into business school, then you discover Feynman. Like a lot of people read about it, get into physics. What happens after that? Like, what are some of the first jobs that you get, and where do you start? Where does your career start?
Yeah. Okay. So my career started sort of on the biomedical side of business. Actually, I
Okay.
come from a family of doctors, and I'm definitely the black sheep. I'm not a doctor at all, um, but I did work at the family business, which was a clinical research organization that was running um, federal Food and Drug Administration trials on various pharmaceuticals or medical devices for approval uh, by the U.S. government agency. And so knew a little bit about how things made their way through the regulatory processes and some of the key technologies in a few different areas. But anyway, so I was on the biotech side, but that was when I was doing banking, and I just did
Okay.
not like banking at all and felt like it was soul sucking. So I decided to put more of my core values to work. Grew up surfing every morning in San Diego, so environment and conservation are super important to me. And that's when I started to look more towards what I'd call sort of like frontier tech, and joined a corporate venture arm of a utility investing in climate tech back in 2008. And that was sort
Yeah.
of where I started to go down the rabbit hole a bit.
What was the scenery like in 2008 about like climate tech? I think now is a thing that a lot of people, at least in the bubble I'm in, it feels like everybody is talking about that, about climate tech, like it's a huge thing. What was it like in 2008? Was it also a lot on people's mind? Was it something that people talked about less? What was it like?
Yeah, I would say it probably wasn't as popular because climate tech was sort of an emerging thing at that point in time still. And venture capital was a tiny fraction of what it is today. So there were quite a few funds that were looking at making climate tech investments at that point in time. Uh, one of the things that occurred to me pretty early on was a lot of the people that wanted to go invest in climate tech did so well intentioned, but didn't have much background in sort of the hard sciences that you typically deal with across a lot of the different climate technologies. And most of the investors I thought were better profiled as software investors and sort of like enterprise software. And so I'd received a few offers to work at Silicon Valley funds, but did not accept any of them, opting alternatively for joining a reboot of a corporate venture capital arm of a utility in Detroit, Michigan, of all places. So in 2008, I think I was one of the few people moving to Michigan to begin with. But I thought it was a much more interesting place to do that kind of work because I was at a utility, so it was sort of at this intersection of policy and industry. What was particularly interesting about this one utility was their three largest customers were also the American auto manufacturers. So we had a whole nother category of climate tech in our backyard where I wouldn't have had that elsewhere. And then I thought that I got to see sort of the other side of the incumbent technologies that climate tech would be replacing, hopefully, sitting from the vantage point of the utility as well. So just a better place to sort of come to speed on a lot of that. And yeah, spent about 4 years doing that. And it was really interesting because it looks vastly different today than it did back then. So back then, I think there were sort of like four basic buckets climate tech investors were looking at: renewables, energy efficiency, energy storage, and transportation. And I think one of the challenges of that period is that there was such a narrow definition of what climate tech was. We didn't look outside of those four buckets that I just mentioned and left a lot of money on the table. And I think that's what's a lot different about climate tech this go around, which is that definition of climate tech has broadened pretty dramatically to include things like companies developing meatless alternatives, because animal agriculture is actually, now we understand, one of the more major contributors to pollution than necessarily like vehicles. So we have to look at what moves the needle a bit more than we did in the past.
One of the questions I have and was curious to ask is around, first of all, how did you get into investing? And the way you phrased it, you said like you wanted to move away from banking to be more on the values that you had, one of them being around the environment. What made you go towards like doing investment to, in a way, scratch that itch? Like a lot of people go like want to help people, and like they become like at what I would say like very practical jobs, like becoming a nurse because you want to help people. I feel like investing is it's much more removed. And so what made you decide, or what factors made you go towards the investing to try to contribute to helping the environment?
Yeah, so I would say one factor was that I knew that I wasn't a deep expert in any single field across climate tech. I wasn't the one that would be developing the new LED or the new solar panel. That's just I didn't have a PhD in any of those fields. So this was one way for somebody that's a relative layman to participate in value creation. And that's the other part for me, which was I wanted to help create value. Whereas banking, I felt like I was taking a fee off a transaction, so I wasn't really creating value. And so that was what really bothered me. And there's nothing wrong with it. It was just my personal preference that I wanted to contribute value. And then the other part of it was I thought that I could learn investing to the point where I wouldn't just be handing over checks, but I would be able to contribute value beyond that. And that can come in many different forms. And I think that's more of oftentimes a knowledge base and a skill set that's developed over time. So that was just sort of the beginning for me.
Do you have some examples of like what those contributions can be beyond like signing a check? Because I do think for a lot of people, and myself included, like that's how I tend to see what the investment is. So what kind of other benefits are there?
And for what it's worth, I hear a lot of VCs say, "Oh, I'm a value add investor," And I would say
Okay.
99.9% of VCs will say that, but actually aren't. Uh, and I think most entrepreneurs will probably agree with me. But there are the rare case where like there is actually value being delivered to the company. So what does that look like? One thing is having a panoptic view of an industry as an investor. You oftentimes can help out in terms of strategy. That can take a lot of different forms. That can be go-to-market, that can be M&A, that can be
Sorry,
product
M&A.
development. Oh, sorry, mergers and acquisitions. So acquiring other companies to that might add value to whatever
Right.
the parent corporation is. Then there's helping out with fundraising. If an investor can help an entrepreneur get a round away much more quickly than they would be able to by themselves, that in itself is actually quite valuable. So that can come in the form of network, doing the outreach on their behalf. There's lots of different ways investors can add value to the companies in their portfolio.
So that seems to me like you do need to have like an understanding of the industry that you're in to be able to get to that level, because you're understanding how the different gears and cogs are all working together, and just even the people who they are, to be able to be like, oh, you should probably go talk to this person, beyond just here's a check, see you in 10 years.
Yeah.
And right.
Exactly. I mean, another one that I spend a lot of time on is actually hiring. You'd be surprised at how many times I'll be performing interviews on behalf of one of my startups. So network plays a big role in that, not just in rubbing shoulders with rich and famous people, but which almost never happens in VC.
Right.
But delivering that to the portfolio companies.
And so why go for investing rather than starting a company, for example? Because like what you're telling me about, oh, you're doing hiring, you're also doing outreach, you're trying to understand the industry. That sounds like a lot like what a CEO would also need to do. So why not found a company and go investing instead?
Well, I think personally, I believe any VC worth their weight could double as a CEO or a founder of a startup.
Okay.
I tend to, I think I find a lot more value in VCs that have operational experience and have been through that path. Um, so, yeah, yes, it does look a lot like the responsibilities of a CEO, but it's really just supplementing
Right.
rather than being the main thrust. And so would I go start a startup? Yeah, I mean, I have in the past. I
Yeah, I
was
think you.
formerly a founder. If I came up with what I thought might be a really good idea, I might do that moving forward. That could incubate a company alternatively.
Right.
There's lots of different ways to approach that.
So I want to touch on like some of your previous experience, but let's take a moment. Could you explain me in like a higher level overview what the role of a venture capital is and how investing works? This is probably a really large question, but I'd like to start there, and then we can start expanding on Earth observation space. But let's start with what investing is, how it works, and we can move on from there.
Sure. So I will describe what venture capital investing is, not to be confused with private equity or hedge
Okay.
fund investing. So
Yeah, that sounds great.
and that's because I'm a venture capital investor. So um, typically, what characterizes a venture capital investor is somebody that invests in early stage companies. So companies that are young, recently founded, and are looking for funding, and selling minority equity positions in their companies to get that funding, using it then to expand their business and grow it. And eventually, hopefully, they take enough money to expand and grow their business to a point that it could be sold or go public at a value much higher than the original investment.
And so the minor equity is like a part of the company, right?
Right. So the reason I pointed out minority equity is venture capital investors don't acquire a company outright. They take
Okay.
less than 50% of the company
Right.
on an individual investor basis.
Right. And so the you buy that, let's say let's go on like 10% you go into you buy 10% at the valuation of an early stage company. That's where they need like upfront capital, and then with the expectation that if they go public, that 10% is worth a lot more by that. Is that correct?
Right. Exactly. So, somebody might have an idea for a brand new toothbrush, but they need $1 million to hire people to help them design it and manufacture it. So they'll go out to venture capitalists. They'll say, I need $1 million. I will give you X% of my company for that $1 million. So that tells them what a share price is, and then they can buy those shares. And then with that $1 million, hopefully maybe they'll generate $10 million
Right.
in toothbrush sales, and so that's valuable to somebody else at some point. So
Right.
maybe a Procter and Gamble will come acquire that company, and they'll say, hey, you have 10 million in revenue. These companies usually get 2 times the revenue. We'll buy your company from you for 20 million. And so that is some multiple, whatever the original valuation of the company was.
So you mentioned early stage companies. What is that? What does early stage mean, and why is that important that they're early stage?
It's important that it's early stage because one thing that VC investors are looking for in their investments is a risk reward profile that justifies their investment. And typically, when you're taking, you have a relationship. The higher the risk, the higher the return potential is. Typically, if you're doing your job right. So the reason they're looking at early stage, to answer your question, is because that is where you'll see the larger growth rates occur than if a company is more established. It won't grow as quickly. So and that's really what that growth rate, that hockey, like you'll hear it referred to as hockey stick growth. That's really what VCs are looking for, and why they have to look at early stage companies, because that risk reward profile that they need really exists at the earlier stages. But there are different flavors of VCs too. So there's VCs that focus on the earliest of stages, and then there's VCs that focus on sort of the later stages of startup, of the startup life cycle.
Can you also? I'm sorry, I'm asking a lot of these simple questions, but I want to build up on them later on. What does early stage compared to late stage mean?
So early stage typically refers to the maturity of the companies. So an early stage company might not have raised any funding yet. They might only have 3 founders. If they're lucky, they got a prototype and a business plan that they've mapped out that they think they can build on.
Right.
And then they might go raise a pre-seed round of funding from friends and family. That might be in the hundreds of thousands of euros or dollars. And then they'll take that, maybe they'll build a better prototype or a minimal viable product. And maybe they have some early customers, and they'll go back out to the VCs, raise a little bit more to continue to expand the company, and so on and so forth. So you'll actually see a lot of companies raise 2, 3, 4 rounds of funding before anything like an exit, whether it's an IPO or an acquisition.
So you want to invest in early stage companies. How do you find them? Because I'm guessing that's a really big problem as well. There's a lot of people doing a lot of stuff, but from what I understand, by definition, you want to get there as early as possible. So how do you find those people, and how do you assess how risky they are? You were mentioning this trade-off between risk and reward, but I'm guessing the earlier it is, the harder it is to also assess that risk.
Absolutely. So to answer your question first, how do we go finding these companies? It's something of a philosophical debate, because I think different VCs will give you different answers. I would say, generally speaking, though, and maybe some VCs will agree with me on this, but generally speaking, I would say most of the companies that I've invested in have been companies that were presented to me through my network. So these were people that I knew that were either investors, entrepreneurs, maybe they were a professor at a university. I mean, all different avenues, but that's where I would say the lion's share of the companies that I invest in come through. But that doesn't mean that I don't pursue other avenues, because I'm always trying to fill the top of the pipeline with new companies. So, I go to a lot of conferences and speak on panels, and I'll meet a lot of companies that way. There are plenty of universities or government organizations that I'll go to. There are, a lot of VCs use scout programs nowadays where they will, allocate carry to somebody that brings a company in that they invest in. So they have a program by which they can deploy people that aren't investment partners within their business, but they will go out, try and find companies that fit the thesis of the fund, and they will get a reward in terms of carry or something like something in return for that service. There's always banks, which it's always fun to deal with. So yeah, I'm kind of looking everywhere all the time,
Right.
and trying really to build a stronger network to ensure a good flow of reasonable deal flow.
So if I sum it up, let me know if this captures it correctly. You're saying like you try to expand the knowledge of people that you know in a specific field, and then you just tell them you have an open door basically, and like slowly build that up over time to the point where someone starts something, maybe like sometimes I'm guessing like years down the line between the moment you started meeting them.
Yeah, sometimes I'll engage people pretty early on, even before they have a company,
Right.
and have that conversation, leading up to the formation of their company. It's I probably should do a better accounting of exactly where all of my deal flow comes from. There's also a lot of data-driven ways I'm starting to do that as well.
Okay.
Because I think using a data-driven approach might provide more consistent deal flow. And so one of the things I think I do, and I'm sure quite a few other VCs do, is one of the places that's fertile ground for new startups is a successful startup. So when somebody becomes a unicorn, oftentimes you'll see the early employees that have made a nice chunk of money off of the exit, they'll spin out and they'll go start new companies. And oftentimes we'll want to know, for example, who's senior at SpaceX if they're leaving to go start up a new company.
Right.
If they are, I want to talk to them immediately. So there's ways you can track that, through building your own little applications. And that's one example of a data-driven approach.
Right. So, I just wanted to go on the notion of risk. Like, but I'm guessing it's a little bit the same thing. Like, it's like if it's a senior at SpaceX, it's probably not the same thing as someone who just comes out of university most of the time.
Mm-hmm. Yeah. So, risk can take a lot of different forms. There can be market risk, there can be team risk, there can even be investor risk if you've got the wrong syndicate of investors in the company. There can be technological risk. They can take so many different shapes and forms, and each company has a different profile of risk. And it's not very formulaic, unfortunately, but it's just a matter of sort of being eyes wide open about what those risks are, and digging them out from the information provided to you. I don't have like a simple answer to that one.
No, it's okay. So now I want to enter like the space side of things. Like, out of all the fields that you could invest in, why go towards space?
I think what happened for me, at least, and this is just sort of me following another one of those cases where I followed my interests. So I had ended up selling my startup, not a big exit, anything like that. It was a fire sale. Once I sold my business that was in the augmented and virtual reality market, I decided, I think Meta has a pretty good lockdown on that. I don't want to compete with them, so I'm going to refocus to a different market. I had worked with a couple of startups in space tech in prior years, and I thought that was just more interesting. It was also a time
Sorry
when,
to interrupt. Can you tell me like what year roughly is this?
yeah, so this was 2012 timeframe. Oh, well,
Okay.
so I'm going to back up for a second. It was 2012 was when I started to become more interested in space tech because Google and Facebook were saying we're going to put up a bunch of balloons and drones to spread internet all over the world.
Right.
That sounded a little silly to me. I thought satellite communications made a lot more sense than that. So I wasn't really sure why this was being proposed. So that's when I kind of started to go down a rabbit hole talking to a lot of my friends from the satellite communications world about this, and then became more interested in space tech. So I had worked with a couple of startups. One was an on-orbit manufacturing of semiconductors, and then the other was a very low Earth orbit imaging company. Um, and so once I'd sold my AR/VR startup, that's when I decided, okay, space seems a little bit more interesting right now. I don't think it's decided yet, the direction of that market, and there's still a lot of blue ocean. So I think that's really interesting.
Right.
And basically it was a path paved by SpaceX at that point.
Yeah, so 2012, what is it? Is it like Falcon 1 just managed to successfully launch something? Is that the time frame we're in?
I don't actually remember.
Okay, right, but it's like really early. Like 2012. There's not as much hype in space still that there is today.
Not at all.
So
There's
what does the landscape look like in 2012? Like what are some of the early projects that you start working on?
Yeah, so there was the on-orbit manufacturing startup that I was helping out with, sort of contributing some of my understanding of how all of that worked terrestrially and how we might be able to sort of reimagine it on orbit. And that had to do with some of my experience in electronics manufacturing,
Okay.
where I knew that there were some serious benefits to doing some of that on orbit. And so yeah, that was what took me in that direction initially. And then there was very low Earth orbit, but I think at that time there was, I mean, like Planet was still sort of like a young budding company at that point. I mean, I think people were just starting to get keen on new space companies getting into Earth observation on the commercial side of things.
Right.
And then other than that, it was like drones and balloons was the extent of the satellite communications. Outside of, I don't even think Starlink was a thing then.
Yeah.
And we weren't long out of, the LEO failures of the 90s still. So nobody was really hot on that just yet.
So let's go on the Earth observation side of things. How did you get interested, and how did you get into Earth observation specifically, like it within the space applications?
Yeah, so my stepbrother, he was working on a redesign of an electric propulsion system. It's a propulsion system that would go into a lot of the satellites that perform Earth observation. And that was sort of my first introduction, because one of the things I realized early on was, yeah, cool, it's a brand new propulsion system, but it's not a venture scalable proposition in that.
Okay.
Let's assume there are thousands of satellites up. They all, I mean, it's very fragmented in terms of what the performance criteria are that need to be met. And so very quickly realized, well, maybe selling propulsion is not a great business to get into, and maybe we leverage the differentiation we have in this particular thruster in a market, and that's our moat, and we build a product around that. And so one of the things we realized very quickly was that this particular propulsion was good for being in very low Earth orbit, and what's particularly good at that point, high resolution imaging. And there was sort of my first exposure to Earth observation.
So you started with a tech, but weren't necessarily convinced by the tech. So you went rather for the like application where that tech could be used.
Yeah.
Right. And so there's been a lot of development in the Earth observation world right now. Like it's growing and growing. How do you see like the field of Earth observation as it is, even from an investment point of view? Like how are you thinking about it today? having had that background of, well, 10 years now actually in it.
Yeah. So um, the way we initially approached Earth observation, at least from the investment side, was we were still looking primarily at upstream providers, meaning people that are putting up constellations, imaging in various bands, and that was how we started in the Earth observation market.
So
So
that's going to be companies like Planet, but like companies that you invested in, like Iceye, like those building those satellites,
exactly,
right?
yeah. So we've got Iceye, we invested in Spire, we invested in HawkEye 360, Satellite View. Um, yeah, I mean we've got quite a few companies that are performing EO of some kind and putting up a constellation of small sats to do that. Um, so yeah, it was that was how it began, and I think what happened was a lot of those companies tried to take sort of the old space model of selling bulk data sales. They thought they could get away with this old model. That's fine for selling to the government, of which the U.S. government is still by far the largest customer of all of that data. But outside of that, in a commercial setting, it doesn't really work well that way because most companies don't have geospatial teams to make sense of all of this data. It's pretty sophisticated stuff even still. So there's a disconnect in the market.
Okay.
What ended up evolving was a lot of these companies realized they needed to create verticalized products to reach the end customers on the commercial side, while they can still do the bulk data sales to the U.S. government.
So
And so we started looking more downstream
right.
um, at analytics companies.
Yeah, that's what I was going to ask because one of the things that I hear a bit, and I bring this example a few times, but Will Marshall, the CEO of Planet, like recently they went public, and he mentioned that he sees Planet as a data company, and they want to work with like partnering up with companies who are going to specialize in those verticals because the challenge of specializing in all those different fields is going to be way more complicated and require a lot of specialization that's not scalable as their imagery is scalable. And so they'd rather partner with those companies. Do you see that the same way, as in like you want to invest in the companies that are generating the data and like keeping it there, and then separately in other companies who are doing the applications who become the experts? Or do you see that a little bit opposed to Will's view in like the same company?
Um, that's a really good question, and I think that's a little bit unclear to everyone in the industry right
That's
now.
why I'm asking you.
Yeah. So I think there's maybe one step that we have not taken yet.
Okay.
That and what I mean by that is we have upstream data providers and we have a lot of people that can probably make use of it. They just don't know how to. So we need to create something that bridges that divide. And what bridges that divide is, I think, potentially, some kind of Earth observation platform that can ingest all different kinds of Earth observation data, as well as other, ancillary data sets, fuse it all together, create this new super data set, and that is on which the analytics can then be run. But I think there's a way to have a platform by which you can acquire and analyze all this data in a single place, and it can be done in a way that's a lot easier than needing a PhD in any of this work.
So are you thinking like the thing that this brings up to me is how Google became the search engine for the internet. Like they became this place to find websites. Like you didn't type in the exact URL of the webpage you went to. Is that what you're kind of imagining? Like a search engine slash views engine for geospatial data?
The way I kind of envision it is, I analogize it to the the game development platforms we have today, like the Unity 3Ds
Ah,
or the
okay.
Unreals of the world, where you build your applications on top of this nice, neat, organized, simple to use environment. That's sort of how I view
Right.
this intermediate step that I think everyone's overlooked to this point.
Why do you think people would have overlooked it?
Everyone wants their walled garden. They want to be the gatekeeper to EO, and so everybody's sat in their corner thinking that SAR is the answer, or that uh, infrared is the answer, or optical is
Right.
the answer. When it's rarely
Yeah.
ever the case. Um, so I think people, especially now with what's going on in Ukraine, are understanding that it's actually a conflation of a bunch of different data sets that we get together, and that's where we start to pull real insights from.
Yeah, this is really interesting. I think Ukraine is a very interesting. Well, I mean, it's a bit unfortunate, but it turned into this very interesting use case where people have a desire to know what's going on, and there's this kind of manual stitching of the data together. I wrote a little Twitter thread a while ago, like trying to find all the sources of data that people are trying to bring together. And it's exactly what you were saying. There's like hyperspectral, there's optical, there's SAR, but there's also videos on TikTok that people can geolocate.
Mm-hmm.
And
Mm-hmm.
then there's people who are able to see traffic jams on Google Maps. Like,
Mm-hmm.
and that's really like we're trying to build this picture of what's going on for a specific use case where like it's crowdsourced because a lot of people care. But what you're saying is we could have that for pretty much any topic, any application, like building something
Yeah,
rather than like outsourcing it to people on Twitter.
yeah, exactly. And I think I do believe there's a way to build that in a way that's so simple that you don't need a PhD in Earth observation,
Right.
or you don't need to be a software engineer to do any of this.
Have you seen Google Earth Engine and what they're trying to do?
Mhm.
What does that look like? What you're envisioning, or not?
It's part of it. I
Okay.
wouldn't say it's the full picture. So
What's
I
missing in
think
your opinion?
um, different people want different data over different areas at different times, or they want historical data. So I think that diversity of data doesn't really exist there,
Okay.
um, and so I think that's something that I think is necessary, but not even just the data being there. It's how you acquire it. And I'll give you an example. If I'm somebody that's concerned about what's going on in eastern Ukraine, I'll want to select different cities or towns or areas of interest at different times of day for different reasons, and I need to be able to tip and queue or task that to a satellite very easily because time is of the essence. And so I can't spend 4 or 5 days calling all the different providers trying to coordinate the data I need over a specific area, because it's also rarely the case that I'll ever get all the data I need from one constellation.
Right, I get you. So what you're saying is that it's not just about like Google Earth Engine right now is a read only. You can't. What I mean by read only and compared to write would be like tasking, as in like you're writing new data. Right now, all you can do is pull from a database and then do analytics on top of it and do a dashboard. But you can't ask for specific data to be added. And what you're envisioning is it's a whole it's a whole package where you want to say tomorrow I want an image there and without really caring who gives you that image behind.
Right, right. Because I mean, and in the big picture of things, for lack of a better term, is we don't actually care about the image itself,
Oh, I totally agree.
right? Like, so we just want the insights from the image.
the the thing is, I feel like whoever builds this like has a tremendous amount of power over the whole industry. And so exactly like you said, everybody wants to build their walled garden. I think people might be more familiar with this, like I think more mainstream application is like all the talks about metaverse all of a sudden, like everybody's talking about it as if it's going to be this open thing. But it's the same thing. It's about like we want to build this centralized platform where everything else lives on, but like nobody wants to go on someone else's platform. So back on Earth observation, do you actually see that as something that could happen? And what do you think it would take to happen to be able to build that? Do you see anybody? Did you have in mind anybody who actually could pull it off?
I've seen bits of it here and
Okay.
there, not the full picture. I think one company that's doing pretty interesting things in that direction is Ursa. They're
Okay.
the SAR aggregator, and they've
Right.
got a pretty neat platform that's in that direction.
Okay.
Not quite the full picture, I would say, of what I was describing. So yeah, there's bits and pieces of it everywhere. And this could be one of those types of things that emerges not out of a startup, but maybe out of a roll-up strategy, for example, where somebody goes around and acquires a bunch of these companies,
Okay.
puts them together, and then we have the full picture there.
Right. Right. Do you see that being like the other alternative is like a complete open platform based on like open standards, like open source code, like where nobody owns it basically. Like either one person owns everything or it's made in a way where nobody owns it. Did you see that being a thing or it just wouldn't be possible?
Um, I, I would, I think there will be a lot of customers that, to some degree, will want to keep some portion
Yeah.
of that private. And I mean, a lot, and I say that mainly because so much of Earth observation data is still consumed primarily by governments. And
Right.
for that reason alone, I think we can say that a lot of it will still need to remain private. So I look at it as something where you can have access to historical data from others if they want to put it up on a marketplace. You can access analytics from others if they and put it up on a marketplace. Um, you could. I think that to me is a lot more interesting because, the last thing, the one thing we don't want to keep doing is like recreating the wheel, and I
Yeah.
feel like so many companies are doing that
Yeah.
in building their own environments to analyze Earth observation data.
Right. Right. So you also mentioned something like we've been talking about like military and civilian a little bit use. One of the things I'm interested in talking about with you as well is the civilian potential for Earth observation, like civilian applications. Um, to me, it seems like that's also something that we're not certain about right now. Like the way I view Earth observation, like the biggest question is like, are we building a house of cards where there aren't really that many applications behind it? And I'd be curious to see like your point of view. Like there was a bunch of tweets recently where you put out like you had invested in like 20 plus companies in space, and like you mentioned like the downstream application was some of the things that you were excited about. Do you see that as like also the pivotal thing that we need to figure out in order for this like house of cards of Earth observation not to fall down, or do you think it can just sustain with military applications?
I mean, I think it can sustain and stay alive with military applications. I think that's just to keep the lights on. I think the
Right.
upside
Okay.
really will be on the commercial side. And so I do believe that there are just so many different applications in which that kind of data can play a role, but hasn't yet, only because this is still relatively new for a lot of people. And they haven't come up that learning curve, and they haven't had the simple tools to develop on top of, on which they could develop on top of. And I think it's sort of a very similar pattern we see in a lot of other industries, where once we give people simple, scalable tools, then we can see it take off. And I think that platform that we sort of described
Right.
has
Right.
a big role in that. And then in terms of like commercial applications, actually one of the ones, and you mentioned this earlier, was that I'm really interested in is the metaverse. And I
Okay.
hate using that term
Okay. Do you have a better one?
But that's what everyone recognizes. So we'll just go with that for now.
Well, I don't know. Do you have a better term?
I don't actually. I shouldn't say that unless I've got something better for you. But, I do think it has a big role. EO has a big role to play in it because one of the things I think we learned early on in this is actually goes back to my work on my company that was involved in AR VR.
Yeah.
We were looking at building a new headset, and the headset I actually didn't care about. I wanted to give it away for free, to be honest. Partly because I just wanted everybody to have a camera on the front of their glasses, mapping everything all the time, and I wanted lots of people wearing them all the time, mapping everything all the time, because that's how you can scale the mapping we might need for something like a metaverse. But what I realized eventually was that only gets you so far. There's a lot that goes into that map that you can't get from a handset or a pair of glasses. And that needs to be supplemented with EO data, whether it's from a drone, from a plane, or from a satellite. And I think all of that has a role on to play in the metaverse. And I think, we're seeing early signs of that already with companies like, there's a company that Microsoft's invested in called, I think it's called Black Shark.
I was going to ask about it.
Yeah.
Have you seen? So look, I want to bring in a bit of context for listeners. Like they helped create the latest Microsoft Flight Simulator, and yeah, I was really curious to know. Like to me, this is the biggest consumer-facing application of like Earth observation, digital twin. I don't know how to call it. It's not Metaverse. And it's pretty amazing. Like you can go fly over your house. And so, yeah, I'm curious to know what you think about that. I just wanted to bring a little bit more context.
Yeah, I mean, I think it's hard to have a map that's constantly updated with just data from handsets, and like that's where the EO can like help continually update that from many different sources. But I just think there's a countless number of applications that we'll discover that are very helpful and useful once we have a functioning digital twin. But we're so far away from that. I think it's easy to imagine a world where we're just building a bunch of virtual buildings and all of that, which is fine. But that's a little bit more like fantasy world kind of stuff. Whereas, having a real functioning digital twin of the world, there's a lot of, I mean, it's hard to even imagine all the applications we can build on top of that.
I do think for me, like flying in Microsoft Flight Simulator was like one of those moments where it clicks about like, yeah, I could be flying anywhere in the world, but I'm going to fly over my house. And like I think Microsoft like put some stats out where like that's the first place most people went to is like they could go anywhere, but a lot of people just went over their house. And I think for me it was this realization that like, okay, out of everywhere there is this thing about like just going to where but in a digital aspect. Like I wasn't really convinced, but after seeing that there's been this thing where it's like, okay, I get why we might want to replicate what we already have, but in a digital sense.
Yeah, absolutely. And I can already imagine something like, there's a few companies out there, for example, that use Earth observation data today to determine where to cut back vegetation along power lines so that, it doesn't touch the power lines and we can stay nice and safe, don't cause any fires. I mean, just imagine a scenario where you didn't, that data would, be directly linked to a headset for somebody on the ground, and they could highlight which portions of the trees they needed to cut back, and this could all be done in an automated fashion.
Right.
And so like that's just like one very overly simple example of how that could all tie into something that's useful, more than just sort of entertainment.
Right. But back to like, that means like if we want to build a common platform to that, like Facebook's probably not going to want to work with Google on, or Microsoft for that matter, on bringing their Bing imagery and then having everything that they've mapped with like Oculus headsets together. Like it feels like as we get there, there's still going to be this clash of of platforms.
I think they'll try, but I think
Right.
that's a fool's errand because I think of the metaverse, this functioning digital twin, as something that's more analogous to the internet than anything, and any one company trying to own that just seems
That's a
counterproductive.
that's a good way to yeah. That's that. I mean, it just even sounds ridiculous when you say it, like owning the internet. It sounds so big, so massive. But in a way, on mobile, that's what happens. Like companies own the internet on mobile. Like the App Store and the Google Play stores are walled gardens where if you don't do what they say, your gets pulled out. And that might be that version of the walled internet just on mobile. So it's maybe not that far off. I don't know.
We'll see. I mean,
Yeah.
I'm sure. I mean, you could argue that, by virtue of anybody using Google services, we see
Yeah,
a
no,
Google version of the internet versus the
that's
real
true.
version of the internet.
Yeah, yeah, yeah. Yeah. I want to come back to something that you mentioned about uh, updating as well. The what we map, like you were saying, like it's nice to like at least from what I took out of it. I forgot the exact phrasing that you used, but it felt like you're saying there's one thing is to like map it, but there's another which is like to monitor the like and have an updated version of what you're showing. Like if you, I think a great example of that is Google Street View. Like it's amazing until you realize, oh, Google Car passed here in 2012, and like the whole block has changed.
Yep.
And so the there's this requirement for like constantly updating that. Do you see that also as like happening at the same time as we map, or do you think it's going to happen where oh we have like Street View or they've done it once and like some parts just never updated?
Yeah, I think it'll be to varying degrees. For example, we don't need to update a map that's out in the middle of a field in the middle of
Yeah,
Alaska, in the middle where no one lives and probably won't go anytime soon. But like urban dense areas, yeah, we might need to update that a little bit more often, right? Because things change and evolve
yeah,
much more quickly there. So I think there'll be varying degrees. But I think as we launch more and more constellations, which there are plenty more that are going to be coming online, we'll have higher and higher revisit so we can get closer and closer
yeah.
to real time. And that becomes more and more useful.
What do you think are some of the applications that happen when you have that higher revisit compared to this like one-time mapping?
Yeah, I mean, you can, I mean, there's so much that can be done. I mean, there can be real time security monitoring. Obviously, we
Right,
can geofence something, and if anything crosses a certain point in real time, then alarms go off and people
right,
can
right.
be alerted to whatever they need to go to. I mean, there can be better fire monitoring. There can be better traffic monitoring. There's just like there's so many different things that if the more real time data we can get, the more useful it really is. Um, you know, for example, I think a company that's really understood this very well is Tomorrow.io, and
Right.
why they plan to launch a constellation of their own satellites at some point, and to get as close to real time weather data as they possibly can.
Yeah, that's a very interesting application. It's interesting when people think about Earth observation. For some reason, weather doesn't make it in the list of what people think about straight away. But I think it's very interesting to see like what planet has done to the optical world happen to the meteorological world. Like it is still this very coarse data, both in like spatially and in time. And I do think there's going to be like a wild. The potential is really high. I think it's actually very interesting to me because I feel like weather applications are already exist. Like a lot of the imaging started like civilian imaging, not military, came out of weather applications. Um, and yet it feels like in the private sector that has been left aside compared to the optical one where that came out from my understanding maybe tell me if I'm wrong, but a lot of the optical observation came out of military applications. And then the private sector continued towards the optical imagery, but not the meteorological one, where a lot of the use cases pretty much already exist. Like, we all have weather forecasts on our phone, and people would pay a lot of money for a better one. Do you have any idea as to why that might be the case?
I have some suspicions.
Let's go.
So one of them being, I mean, as you correctly pointed out, it was sort of the domain of the government for a long time. And I think part of that was because there's a larger infrastructure cost in the preceding years that was prohibitive of the private sector, and why we only saw some of the largest companies trying to tackle this problem, like IBM, for example. But once that cost started to come down, where we could start to launch satellites with radar on them for less than $100 million, okay, then the economics come down to a point at which it starts to make sense to consider improvements to that ecosystem. And I think the other part of it was, I mean, weather modeling is like not an easy thing. It's really, really complicated. And so, I mean, that a lot of that talent for a long time really only existed, well, in the US at least, really only existed within NOAA. And so there was a limited talent pool at the same time. So I think between those two forces, it really struggled to sort of penetrate the private markets. But now that cost has come down, there is more talent. And by the way, a much, much larger need nowadays, given weather volatility, because of climate change.
Right.
Those sort of come together in a way that it makes sense to start investing way more into all of this, because, as you and I know, weather affects everything out there.
Yeah. Right. It's interesting. I'm very curious to see what comes out of that. It also feels like it gets less traction in a way because it's harder to show an image. I feel like, at least I'm on Twitter a lot, and I don't, like, even if you follow Spire or Tomorrow, the way people hear about them is very different. Like, you can't show, oh, here's an image that we took, and like, here's what it looks like, because it's weather measurements that you need to model, and as you said, which is like a lot more complicated. Do you think that has actually an impact, or do you think that's just not that significant in terms of like the outreach possible, just because people can actually see the stuff?
That's a really good question, and I don't really have a good answer for you there. I think I always think you obviously, to reach a wider market, you have to sort of dumb things down quite a bit,
Right.
and when it's really been the domain of highly trained, very sophisticated scientists, it takes time for somebody to figure out how to simplify it so it becomes accessible to people that aren't these highly sophisticated trained scientists, and so I think that's just started to happen, and why we're starting to see companies like Tomorrow.io emerge.
Right. I want to take a bit of a step back and come back to the like higher overview of venture capital. Do you think there are specific projects that aren't well suited for venture capital, or venture capital isn't well suited for some projects? I'd be very curious to hear you on that as well.
Yeah, I mean, there's lots of things that venture capital is not well suited for. Not every single business in the world, despite what we probably hear on the news these days, needs to be a unicorn. A lot of those companies have to be a unicorn to justify, the funding they're taking. But there's plenty of people that can build businesses that aren't venture scalable, that will net them a nice return, and they can go home happy at the end of the day. I've got friends that sort of they try and build passive income by building shops on Amazon, for example.
Right.
And traditionally, that would not be something a VC would be super excited about, only because there's not a lot of differentiation. There's not a high barrier to entry. It's really driven on somebody else's platform. But you can make a nice income for you and your family that way. And there's nothing wrong with it.
Right.
So on the opposite end, then there's investments that are more infrastructure. So something like a bridge, for example, that needs to be built. Those types of investments, it's not something that's venturable because it doesn't have that risk reward profile that we had talked about earlier. And so a lot of infrastructure or project investments aren't really where you'll see any venture capital investors.
Right. So this actually gets me thinking about the analytics layer that we were talking about earlier. For what I understand, a lot of the reason why venture capital is really important in the hardware side is because hardware is like stupidly expensive to build, to research. Like the tooling that you need is really complicated. On the analytics side, you need people with a laptop and a subscription to AWS, which becomes like really high. But I feel like the cost of entry is much lower. Do you see that as something where we might see a mix between like venture-backed companies and more like bootstrapped or financed completely somewhere different, like with something a lot more scattered than we see in the hardware space?
Mm-hmm. Absolutely, that's a great question, and I think you're spot on, actually. So one of the things that we're seeing as venture capitalists, maybe on the software investment side of things, is the fact that it's lower barriers to entry, lower cost to entry. They can start generating revenue and a bottom line a lot sooner, oftentimes, than a hardware startup can. And as such, you don't necessarily need venture capital all the time for that. And you can actually do these things now that where your revenue is actually financed. So you can get it looks a lot like a debt vehicle that you'll receive based on the cash flows that you're generating as a startup, and you can take funding that isn't dilutive at that point then, because it's financed by your revenue.
Right.
And those can be really attractive alternatives to venture capital, and I think it's no surprise that some of these companies that are out there doing that right now have gained a lot of traction very quickly.
Right. Yeah, it's pretty fun building a podcast. Seems to be a little bit the same thing. Like the barrier to entry is very low, and like taking it as a business like that feels a little bit like this, about like how do you keep going and moving on like that. I do want to stay on this financing of venture capital. One of the, again, pretty simple questions I had was, where does the initial money come from? That's the question.
The initial money for the venture capitalists, or the initial money for the startups?
Like it's an upfront for the venture, like because it's an upfront payment with things that look like year-long payoffs. And I'm guessing there's like all the failed projects as well. So I'm quite curious to understand like how do you start a fund, and where does that money usually come from?
Yeah, so I would say that where the money comes from differs by the stage of the firm, the investment firm. So I'll give you an example. Very early on, new funds will oftentimes go to high net worth individuals and family offices, and that is because they are sometimes they'll have an allocation for like high risk investments, and sometimes VCs a part of that. They use that to sort of turbocharge their returns. And so they're oftentimes happy to take sort of that high risk investment into a first time manager with their first fund. It's also typically because they're willing to write smaller checks and into first-time funds, which are typically smaller. So, as a management company that's as a firm that's managing a venture capital fund, you might find some early success. They might go out and raise fund 2 and fund 3. Then the profile of your limited partners or your fund investors begins to change a bit because you'll need larger and larger checks for a larger fund. Then you start to get into institutional investors. Those can be university endowments. Those can be pension funds. Those can be asset managers or hedge funds. There's a lot of different avenues, and we're starting. There's even specialized funds called fund of funds out there.
Okay.
So yeah, there's a number of different sources, and I would say none of them are exclusive to any.
Right. So it's a mixed bag of like all these different sources. That then your job as a venture capital is to like take that pool of money and then try to find which projects that you can allocate it to.
Exactly. So the way it traditionally works, and this is another thing that's evolving within venture capital these days, but traditionally, most venture capital funds have 5 years to deploy that capital, and then another 5 years to harvest returns from those investments.
Okay.
By selling the company, taking it public, or selling their shareholding to somebody else.
Right. Do you think that, like, I feel like a cynical take that I hear sometimes is the fact that like that's still quite short, like 5 years, on the returns on some of the projects that you might want to have. How do you think about that? Do you think it's a can't find the word, but a proper take on that, or do you think it's just like we need to find other ways to invest in projects that might be longer term?
I think we do need to find different ways to invest in projects that are longer term, and I say that predominantly from the frontier or deep tech vantage point, because generally speaking, a lot of those companies, like you correctly pointed out, have longer time horizons to exit, and will take on more dilution, and it just so happens that that number looks closer to 12 or 13 years versus a 10-year fund life. And so the 10-year fund life can create a perverse incentive where there might be a situation that an investor into a company is approaching year 10 and needs to harvest returns, and it creates the situation where that investor might be pushing a startup to go public or sell themselves before they really should be. And then we start getting into this problem that I'm sure you can imagine can get out of hand pretty quickly. And the way to alleviate that is, there's a lot of like innovation going on now around this, by virtue of using permanent capital structures, so evergreen fund structures where the returns are recycled instead of being paid out to fund investors. Okay. And so it's more like holding a share in a company than it is, being owed a return based on distributions from an investment. Right.
One of the things I also wanted to touch upon is the exit strategies and what happens after, actually. Is it from a venture capital point of view, is it like the end game is going public and then that's where the work with the company stops and they take on themselves? What's the relationship that happens at that point?
There's all types. There's some investors that once a company's gone public and they're out of the lockup, they can sell their shares. That's it. They're done. But there's often cases where you might realize that the company still has a lot of upside. You want to hold on to it and continue to help the company grow. Sometimes that includes the investors on the board still supporting the company from that position. So yeah, you have all different types, and it really just depends on the profile of the company and where they're at a point in time, and what avenue they decided to go. Because once it's sold, then via an acquisition, then the parent company takes over at that point.
Right. One of the interesting things that's been happening on like the past year or two is seeing how many companies have gone public in the space, and especially like Earth observation. Actually, there's been this word like SPAC thrown around a lot, and we're seeing these like crazy valuations for and projections for some of these companies. This is like the first time I am actually paying attention to any of this in any industry. It seems wild to me, some of the valuations that we're seeing for those companies. Is that, do you see that as being like some of those being wild as well, or is this like business as usual in normal numbers for other fields?
So I would say, in the backdrop, we have been achieving sort of historical highs,
Right.
and in terms of valuation and money invested, and it's in venture capital, it's typically a pendulum swing between
Okay.
large money supply that will drive massive valuations because people need to justify their investments. And then, there's typically some kind of market correction, that money supply contracts. And instead of focusing on growth, everybody's focusing on bottom line. And so you kind of go back and forth. And I mean, so I've heard people say, it's something like a 10-year cycle, 10, 12-year cycle. And that seems to be about right. So yeah, I would say that there is this there's this cycle, and in regards to SPAC, it's interesting because it's very has a lot of parallels to my time in climate tech back in 2008.
Okay.
And so what happened in 2008 was an IPO window started to open, and there had been a lot of liquidity for climate tech up to that point in time. And once that window opened up, every VC was just cramming through every single company they could possibly get through the IPO window before it closed. And so you had a mixed bag. You had some companies that were great. They lasted a long time thereafter, and they're still around today. It's funny. It's one of the usual suspects is still Elon Musk. I mean, that's an era that Tesla came out of.
Right.
And so I wouldn't say it was a failure. I would just say it's pretty par for the course, really. And so I think we saw a lot of that happening with the SPACs in similar fashion, where there are some really good companies, there's some not so good companies, but everyone's trying to cram their businesses through the window, the exit window, as quickly as they possibly can, and that creates, an oversupply, and then eventually it contracts again, and there we go. So, my view, I think there will be good companies that survive and do just fine, and the ones that were a little less forthright on their projections, they won't be around, and so I think what that leads us to is, at least on the EO side, I think there'll be quite a bit of consolidation in the coming year.
Right. Do you I don't know what the term might be, but in the world of artificial intelligence, there's this notion of like AI winters that happened on the tech side. Like I think there's been like 2 or 3 where there was like a huge hype cycle, and then like it just came crashing down. More on the research side of things, and then like it started again, and then it crashed again, and then it started in like 2012 again in the current cycle. Do you think that could happen as well on the tech side, that we're like maybe in a bubble that could just pop on the Earth observation side, or do you think it would be less dramatic than that?
I don't know that I would refer to it as a bubble, but I mean I think you correctly pointed out these hype cycles and the valley of death, and it kind of we go between the two. And that's a pattern we see across a lot of different industries. So what do I think will happen? Yeah, I think we've been through the hype cycle. People are a little bit wiser now. And so we'll see a bit of a pullback. But that's fine. I think that's sort of cutting fat in a way, where we get rid of a lot of the money that might have been dumb money and made poor investments.
Right.
That'll fall away. But the stronger companies and the stronger investors will remain. And so it'll become popular again. And for example, 2008, climate tech definitely fell out of favor after a while. I think largely by 2010, it was sort of a taboo topic at that point.
Okay.
And because for a lot of reasons, but irrespective, it reemerged the last couple of years as one of the biggest segments of investment for VC. coming back bigger, better, stronger than before. And I think we'll go through those same cycles with space. But I think ultimately, long term, I'm still long space because, there's so much that can still be done and so much upside that I don't think it'll fall away. Especially once Starship hits. Once that happens, it's again a different world that we'll be living in.
That's the thing I've heard you talk about a few times. So, like, just to again bring in a bit of context, Starship is something that SpaceX is developing, which is basically trying to 100x the payload. First of all, payload capability that we can send at once, but also like divide the price per kilogram roughly by 100x as well, at least if things are to be followed from what SpaceX is saying. And so you're saying that's also going to be like just a jump start even more for just sending stuff, but we're maybe even talking about like beyond Earth orbit here.
Yeah, well, I mean, I think sort of. It's funny that you use the term beyond Earth because that's a phrase that I use for companies that are literally looking at markets beyond Earth. But I think a lot of that's going to be the domain of governments for the foreseeable future, and why I don't spend a lot of time looking at sort of the beyond Earth category.
And what makes you think that? Like, why?
Well, I don't know that there's a great commercial argument that I've heard yet for the cislunar economy. Just at this point, most of it, I think are companies that are being funded by government contracts. In the absence of like a commercial argument, it's hard to invest in.
Okay, right, I see. Well, this has been like really cool to understand a lot more on this aspect of like the whole economy and like the whole just field of Earth observation in general that I think like drives a lot of the things that we see. I think following the money is something I'm trying to do a lot more, and this has been like really interesting to be able to understand that. Before I'll let you go, I like asking the same question at the beginning, but I also like ending with the same question. And so I'd like to know if there are any books or podcasts that you've read or listened to that you've enjoyed and you think are worth sharing. Not necessarily in any of the topics that we've talked about. It can be, but just anything, like even like fiction or whatever, just something that you think is worth sharing. And I like asking those because podcasts and books are pretty hard to discover, and so I like asking people about recommendations.
Sure. I would say one podcast that I find myself listening to quite often is Sam Harris's podcast. I forget I don't think it's called Waking Up anymore. It's got a different title now, but Sam Harris is a pretty well-known public intellectual.
Yeah.
And I think he discusses a lot of interesting philosophical points that I'm not smart enough to synthesize myself, so it's fun listening to him talk about it. And I think that's one I really, really enjoy because he touches so many different interesting topics. And it just ranges very widely. Another one that I think I listen to pretty often is it Alex Friedman?
Lex Friedman.
Lex Friedman, thank you. Sorry about that. Yeah, Lex Friedman. Yeah, it's just like it's enjoyable. It's fun to sort of hear about other really, really smart people and how they think about their fields, and just sort of a fun exploration. And then
we wouldn't be having this conversation if it were not for Lex Friedman podcast. So
it's a great one. I love it. I would say those are like sort of like my two staples, and then there's like a bunch of like true crime podcasts that I won't tell you about that I listen to all too often because that's my dessert.
Right. Do you have any? I know you seem to tweet a lot about books. Do you have any books that you recommend?
Sure. I think one of the books that's influenced my thinking over the years the most is a book called Gödel, Escher, Bach. And I found it particularly interesting because I do a lot of art in my free time,
Okay.
and it's focused around things that are universally beautiful. And I sort of came to it through music, actually. And I don't know anything about music, but what I did realize is, we can all speak different languages, but we can listen to a song written by Mozart, and just by the way it sounds, we can all recognize it as being happy or sad. We can identify it without having to say the same words. And so I think there's sort of a parallel concept in art. There's just these things that we often find universally beautiful, and where that comes from. And so, that's, geez, I lost my train of thought already. Sorry.
Could you just repeat the name of it, and do you remember?
Oh, Godel Shabbat. That's where I was going with it. So in art, I started to realize there's like these like universally beautiful things, and that can, the golden ratio, for example, you'll hear about that in art a lot, and how that's attractive to the eye. And so I really wanted to start to explore those concepts of what this sort of order is that we're all attracted to, this underlying order, and this book discusses some of that in a really fun way across different disciplines, and so that's one of the reasons I enjoyed it, was because you really start to understand that a lot of times what you learn in one field can be directly applied to something that you think is totally unrelated, and therein lies some fun and interesting discovery.
Right. Do you know who wrote this? I can probably look it up.
It's Douglas Hofstadter.
Okay, thanks. I was just a little bit afraid not to be able to find it just from the name alone.
No, it's a really fun book.
Okay, cool. Well, thanks a lot for answering all these questions, spending some of your valuable time with me. It's been a very insightful conversation. So thanks a lot for coming here and talking with me.
No, thank you. It's been a lot of fun on my end as well.
That's great. That's one of the best things I could ask for.